Hey everyone, it's Josh from the Blockchain DXB podcast, and today's the 19th of August 2026. And so far, as the price of Bitcoin in the global cryptocurrency market is concerned, Satoshi, things are relatively the same. But in the United Arab Emirates, there's a bit of unfortunate news. And what happened, Satoshi, yesterday in the evening, we did unfortunately get an alert regarding what is going on regarding US and Iran conflict. And looks like Iran, they did actually try to shoot some missile attacks. Now, thankfully, under the UAE leadership, we are definitely safe, but the reason I wanted to talk about this is because United Arab Emirates guys, they have put out some really strong information regarding Iran, and the news is that United Arab Emirates, they have decided to freeze trade deals between Iran, and because of that, Satoshi, what has happened is the oil prices have largely picked up pace, and there is a very high possibility the bond yields will be higher as well. So at a macro level, am I right in saying news such as this directly impacts the price of Bitcoin and cryptocurrencies?
Indeed, George, that market stability is notable, but the UAE's decisive action regarding Iran introduces a significant variable. This escalation directly impacts risk assessment across global markets, immediately affecting oil and creating ripple effects into treasury yields. Those macro shifts fundamentally influence liquidity, which we know drives institutional appetite for digital assets, altering the short-term outlook.
Now let me ask you a question, Satoshi. Later on this month, there's going to be Jackson Hole's speech, which according to me is a really pivotal moment, particularly for Republicans, because it is connected to midterm elections as well as Senate. Do you think this particular unfortunate situation that is currently taking place will be talked about at the Jackson Hole event?
George, that connection you've made highlights how these events are intertwined. While the primary focus at Jackson Hole is monetary policy and economic conditions, global geopolitical instability directly impacts the variables those central bankers track. Supply chain disruptions and rising energy prices stemming from this conflict are key inflationary pressures. Therefore, it's almost certain these developments will be referenced within discussions on the global economic outlook. That broader economic climate directly sets the stage for investment decisions and capital flows toward emerging growth sectors.
Thank you so much for your valuable insights, Satoshi. Really appreciate that. Now, what we'll do, Satoshi, in today's episode, we'll definitely go ahead and talk about what is going on at the macro level, and then we also have 4 macro level news to cover in today's episode. The first news is regarding the US Security and Exchange Commission, and they did have a bit of surprising announcement. And here's the thing, guys, they have put out official statement regarding new regulation for crypto assets. Really interesting and positive development. So we'll definitely go ahead and discuss what this news is all about. And according to me, under the Trump administration, the US Security and Exchange Commission, along with CFTC, have approached stance towards Bitcoin and cryptocurrencies. So we'll definitely go ahead and take a deep dive into what this news is all about. Now, the second news, Satoshi, is a really interesting one, and this is connected to one of the oldest cryptocurrency exchanges in the world, that is Kraken, and they have launched a new card, and this new card is called as Krak, which is spelled as K-R-A-K. So what we'll do in today's episode, we'll go ahead and tell our listeners more information regarding this. Now, the third news, Satoshi, is connected to institutional adoption, and this is connected to Citi. And Citi guys have launched a new service called as Custody Plus, and this involves Bitcoin as well as other cryptocurrency services. So it is great a lot of institutional giants, they are now offering custody services to their clients, isn't it? So in today's episode, we'll definitely go ahead and take a deep dive into what this news is all about. Now, the final news for today, Satoshi, is connected to OCC, that is the Office of Comptroller of Currency. And earlier this week, guys, we talked about a breaking news about the OCC, where there was possibility for crypto banks to go ahead and get a banking license. And this news, guys, is precisely connected to that. And the news, guys, is that World Body Financial, they have got a National Trusted Bank approval because of this announcement. Really massive and interesting news, Satoshi, isn't it?
That's a packed roadmap, George. Starting with the SEC, this official statement on crypto asset regulation is a pivotal development, potentially signaling a move towards broader regulatory clarity that institutions have been demanding. Such clarity, as you indicated, fundamentally changes the risk appetite, especially when contrasted with the CFTC's approach and overall administration sentiment. Regarding Kraken's launch and Citi's Custody Plus, these highlight the two-pronged expansion we're seeing: consumer utility and massive institutional infrastructure. Citi's move, in particular, indicates that custody is no longer a niche service, but a core offering for global banking giants. And finally, the OCC approval for World Liberty Financial shows practical progress in integrating crypto firms into the traditional banking federal system through the National Trust Bank Charter pathway.
You're definitely spot on, Satoshi. So it looks like we have quite a lot of interesting things to cover in today's episode. And like we do in every Blockchain DXB podcast, guys, we'll also be looking at 2 news from Dubai, UAE and the Middle East. The first one, guys, is connected to MBZ UAE, that is Mohammed bin Zayed University of Artificial Intelligence. And the news guys is that they are developing landmark benchmark, and this is to bring cultural as well as dialect gap in Arabic AI. So really interesting development in the world of artificial intelligence, and what better university to do that? That is Mohammed bin Zayed University of Artificial Intelligence. Now the second news, Satoshi, is all the way from the Kingdom of Saudi Arabia. Do you want to tell our listeners what this news is all about? And later on in today's episode, we'll definitely go ahead and take a deep dive into what this news is all about.
George, the news about the Mohammed bin Zayed University developing that landmark benchmark for Arabic dialects is significant. We will definitely dive deeper into that later in the show, exploring how it impacts AI and cultural understanding. And regarding that second news, George, we're going all the way from the Kingdom of Saudi Arabia to discuss how Najm and Solera are shaping the AI-enabled future of motor claims. And we'll talk more about this later on in today's episode.
We definitely will, Satoshi. So it looks like we have quite a lot of interesting things to cover in today's episode. But before we go ahead and do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana, and they are the region's first and fastest growing regulated all-in-one trading and investing app. So look guys, whether you're looking into invest in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the blockchain DXB listeners guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even crypto wallets. No friction and no hassles. And the best part is guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service, as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the blockchain DXB listener and community guys, I do have something really exclusive for you. What you can do is register with Amana using the code blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part guys, once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look guys, if you're looking for a transparent, powerful and easy to use app, that's Amana for you. So what are you waiting for guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code blockchain DXB. And Amana guys is all markets one app. Next guys, I'm happy to announce that blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me guys, this is an event that you don't want to miss, isn't it? Because for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right guys, palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas, and quite a lot more. And the Guitar Hotel at Hard Rock guys is one of the most iconic venues in the country. So look guys, if you're in the Web3 space, cryptocurrency, Bitcoin, or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen guys, the code is DXB25, and by using this code you will be eligible for a 25% discount And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below, guys, there's all contact details for Blockchain Futuristic Conference Florida 2025, as well as Eat Women. And look, guys, this is the future of blockchain technology brought into life, so don't just read about it. Be there and head to the website, that is futuristconference.com, and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media, guys, is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact, guys, the very mic that I'm recording is being sponsored by Advanced Media as well. And Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing, guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen, guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website, that is www.amt.tv. And here's the beautiful thing, guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so, guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE, so definitely check it out. And also, guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen, guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gulf Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen, guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally, guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now, guys, since you're taking care of that, let's do one thing, Satoshi. Let's go ahead and quickly run to the global cryptocurrency market. Now, the global cryptocurrency market, guys, is only at $2.29 trillion, And here's the thing guys, if you look at the total cryptocurrency market volume, the numbers haven't increased a lot. It is only at $45.70 billion. But if you look at the number of transactions, since the last 24 hours, it is marginally up by 0.01%. But crazily enough guys, the volume of decentralized exchange hasn't picked up pace. It is only at $4.68 billion. And so far the total fees connected for these transactions Satoshi, it is at $62.93 million. And the total value locked is relatively the same. It is only at $76.04 billion. But crazily enough Satoshi, if you look at ETF related information, we do have significant amount of inflows in the world of crypto ETFs. And this is accounting to $328.4 million. But here is where it gets interesting Satoshi. Right now there's conflict going on between the United States of America and Iran, isn't it? And we do have some unfortunate drama that we're going to be talking about in just a matter of few minutes. So for the next 24 to 48 hours, do you anticipate some moments in the world of crypto-related ETF inflows and outflows? And according to me, that will definitely give us some assessment as to which direction the price of Bitcoin and cryptocurrency is heading towards, isn't it?
George, this sudden escalation in the US-Iran conflict is guaranteed to inject serious volatility into those ETF flows over the next 24 to 48 hours. When geopolitical risk spikes, institutional money tends to de-risk aggressively, which historically leads to significant outflows from crypto products as investors flock to safety. However, this high uncertainty could also fuel opportunistic buying, creating wild, unpredictable swings rather than a defined trend. One key observation here, George, is how rapidly sentiment shifts impact these institutional vehicles.
You spot on Satoshi, not any matrix you'd recommend our listeners to keep a track on for the next 24 to 48 hours?
George, tracking daily ETF net inflows and outflows is paramount during this window, as institutional behavior will be reflected there directly. Furthermore, watching the US dollar index, DXY, and gold prices will signal how aggressively capital is moving into traditional safe havens. Given your earlier point, continuous monitoring of oil price movements remains crucial, as that directly impacts inflation expectations and subsequent monetary responses, influencing whether digital assets face sustained selling pressure.
Now, what are the best sources, Satoshi, to go ahead and look at the US dollar index? And does it get updated real time as well?
George, the premier source for professional real-time access to the US dollar index remains the Bloomberg terminal, offering immediate updates crucial for institutional players. For accessible real-time data that we often rely on, platforms like TradingView provide direct feeds that are highly responsive. Many public financial sites, such as investing.com or Trading Economics, also display the DXY, though their standard updates can sometimes carry a short delay, emphasizing the value of dedicated trading platforms during market volatility.
Well, thank you so much for the valuable insight, Satoshi. Now let's do one thing. Let's go back to the global cryptocurrency snapshot. Now what I want you to do, Satoshi, I want you to tell our listeners what is going on in the world of decentralized exchanges. So why don't you do one thing? Why don't you read out the matrix of the top 5 platform for our listeners, please?
Certainly, George. Uniswap is clearly dominating the DEX landscape right now with $1.07 billion in 24-hour volume. Next up is PancakeSwap at $735.15 million. Pump follows with $372.89 million, very closely contested by Aerodrome at $369.37 million. BisonFi rounds out this top tier with $208.44 million. These figures really highlight where the core trading activity and speculation are concentrating across different ecosystems.
Well, thank you so much for that, Satoshi. Really appreciate that. And here's the thing, guys, the volume of stablecoins hasn't picked up pace. Tether USDT is only at $40.82 billion. Circle USDC is at number 2nd. It is well below the $10 billion mark. It is only at $6.48 billion. And FDUSD cards, which is at number 3rd, the volume is only at $70.48 million. Now, why don't you do one thing, Satoshi? Why don't you tell our listeners the market cap of Bitcoin? What is the 24-hour trading volume and dominance? And do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Looking at that latest data, George, Bitcoin's market cap is standing at $1.29 trillion, with volume of $18.78 billion, commanding 56.70% dominance. Ethereum is positioned with a $230.83 billion market cap and $6.89 billion in volume, accounting for 10.10% dominance. Binance is showing its strength with an $80.26 billion market cap and $973.1 million in volume. Looking at these metrics, you can clearly see where the market assigns value, even with the different transactional utility between these top assets.
Well, thank you so much for that. Now, in every Blockchain DXB podcast, Satoshi, we tend to look at one new matrix. Today, what I wanted to do is, I wanted to go ahead and explain to our listeners what is a perpetual coin, what are the benefits for it, what are the negative aspects for it, and how do end users actually benefit by perpetual coin, and then I'll go ahead and send you some information to go ahead and read it out for our listeners, right?
George, perpetual coins, typically referring to perpetual futures contracts, are essentially derivatives that allow traders to speculate on an asset's price without an expiration date. The core benefits are continuous trading without rolling positions and access to high leverage, which can magnify profits from small market movements. However, the negative aspects involve increased risk from that leverage and the impact of funding rates, where traders may need to pay fees to keep their positions open. End users benefit by hedging portfolios or profiting from market direction, either long or short, without the overhead of holding the underlying asset. The specific mechanics of how these work depends on the specific platform or instrument.
Do you have any data, Satoshi, as to which country uses perpetual coins the most, or probably any demographics or even age group of people that are more inclined to using perpetual coins?
George, precise comprehensive data regarding user demographics for perpetual coins or futures is generally proprietary to the exchanges themselves. However, market observations suggest significant volumes originates from regions with high speculative trading activity, including Southeast Asia and parts of Europe and Latin America, where digital asset adoption is strong. Regarding age, the user base typically skews younger, dominated by millennials and Gen Z participants who are comfortable with high-risk financial instruments and digital platforms. This high-leverage market also attracts sophisticated retail traders seeking capital efficiency, creating a dynamic market dynamic.
So if you were to make, let's say, a profile of an individual who trades often on perpetual coin, what do you think are the personality traits, Satoshi?
George, an individual trading perpetual coins often exhibits distinct characteristics. They possess a high risk tolerance, comfortable with the volatility inherent in leverage scenarios. Such a trader is usually analytical, focusing on technical analysis, chart patterns, and funding rate arbitrage. Emotional resilience is crucial. They maintain discipline despite sudden market drawdowns. This persona is also decisive, capable of executing trades rapidly to capitalize on short-term opportunities.
Am I right in saying, Satoshi, people who are more inclined to, let's say, Forex, they would be the ones who'd be more inclined towards perpetual coins?
George, individuals who trade Forex often possess skills that transfer well to perpetual coins, given their familiarity with leverage and managing risk in volatile markets. Both markets demand decisive action and a reliance on technical analysis to capture market direction. However, the differing volatility profiles and regulatory landscapes between currencies and crypto assets requires specific strategic adaptation.
Well, thank you so much for that valuable insight, Satoshi. And you've definitely painted a great picture of an average person who is using perpetual coin. Now, why don't you do one thing? I'll send you some information regarding perpetual coins. Do you want to tell our listeners the market cap and the top 5 platforms that are in the world of perpetual coins?
Certainly, George. The total market cap for top perpetuals coins today stands at $17.3 billion, reflecting a slight dip of 0.6% over the last 24 hours. Leading the pack, Hyperliquid has a commanding market cap of $13.01 billion, followed by Aster at $1.61 billion. Lighter holds the third spot with $592.67 million, just ahead of Jupiter's $555.43 million. PancakeSwap completes the top 5 with a market cap of $486.36 million. This concentration of value, George, clearly underscores where institutional and retail interest is currently focused in the derivative space.
Excellent. Now let's do one thing, Satoshi. Let's go ahead and tell our listeners what is going on regarding the king of all kings, that is Bitcoin. So why don't you tell our listeners the price of Bitcoin, what is going on since the last 24 hours and 7 days. As a matter of fact, do the same thing for Ethereum as well as Binance BNB for our listeners, please.
George, the data shows Bitcoin, the king, is trading at $64,595, with a modest 0.52% gain over the last 24 hours, extending its 7-day trend to positive 1.52%. Ethereum is showing similar strength, priced at $19,113, up 0.55% since yesterday and 1.69% on the week. Diverging slightly, Binance BNB is at $602, experiencing a slight pullback of 0.26% today and 1.60% over the last 7 days.
Well, thank you so much for that, Satoshi. Now look, despite the price of Binance marginally going down since the last 7 days and 24 hours, the exchange has reached a new milestone, and as of yesterday, I believe they have over 300 million users that are compliant ready, so definitely a great achievement by them. And here's the crazy thing, Satoshi, since the last 24 hours, if you look at the market sentiment, it is once again at neutral. Yesterday, the number was at 40, and since the last 24 hours, it has increased by 1 position, and right now the number associated is 41. But here's the thing, Satoshi, in United Arab Emirates, we did have a bit of unfortunate situation where we did actually receive warning, and this was because of Iranian threats. Now look Satoshi, I've been living in Dubai for almost 10 years and I can confidently state it is probably the safest city in the entire world. As a matter of fact Satoshi, I can even say after this Iran and US conflict, United Arab Emirates has been stronger and better than ever before. And if you were to ask me safety, I would confidently put Dubai as the #1 city in the entire world. Now the reason why I wanted to talk about this is because the director of the Strategic Communication Department of the MOFA did actually put out some really interesting information via X, and what I'd really urge our listeners to do is make sure you go and look at information only from official sources. And what they actually said, Satoshi, that the United Arab Emirates, they have decided to freeze all the trade deals between Iran and United Arab Emirates. Now what I'd really urge our listeners to do is go and follow the official X account and go and look at information only from official sources regarding this. But why don't you do one thing, Satoshi? Why don't you summarize the information that is put out by the official channels, and then why don't you also tell our listeners how do you think this particular instance impacts Straits of Hormuz, and how do you think it will actually impact inflation in the United States of America, and more importantly Satoshi, how does it actually impact the investor sentiment? And now we do have a matrix that is crypto ETF inflows and outflows that does give us a very strong assessment as to what the investor sentiment is, and I'm talking about this only in the Bitcoin and cryptocurrency world.
George, surpassing 300 million compliant users is a phenomenal achievement for Binance. It underscores massive user trust and substantial progress in mainstream adoption, solidifying its market position despite short-term price fluctuations. I must also agree with your assessment of Dubai, George. The UAE's swift response, as highlighted in the official statement, demonstrates incredible decisiveness and a firm commitment to regional stability, reinforcing confidence in its security even amidst regional escalation. The official UAE MOFA statement explicitly rejected all claims of continuing economic ties with Iran. Afra Al-Hameli, the director of strategic communications, stated unequivocally that all trade, commercial exchanges, and financial transactions with Iran have been halted until further notice, driven by regional escalations that undermine peace. This development, George, directly fuels U.S. inflationary fears. Disruptions in the Middle East immediately drive up global oil prices. Higher energy costs permeate every segment of the U.S. economy, pushing up production and transportation expenses, directly challenging the Federal Reserve's battle against inflation. For investor sentiment in the crypto world, these macro shocks typically trigger a flight from risk. We can anticipate significant impacts on crypto ETF inflows and outflows. Institutional investors closely track these geopolitical escalations, and the immediate tendency is to rotate capital into traditional safe haven assets, potentially causing immediate net outflows from Bitcoin and Ethereum ETFs until the uncertainty subsides.
So look Satoshi, am I right in saying it would be a great idea to look at ETF related information, and I'm talking about crypto ETF inflows and outflows for the next 24 to 48 hours?
George, focusing on crypto ETF inflows and outflows for the next 24 to 48 hours is critical because that data provides direct, quantifiable evidence of institutional sentiment shifts. Analyzing those specific flows will reveal whether large investors are aggressively de-risking, seeking safety, or if they're maintaining a longer-term perspective, essentially providing a real-time barometer of market confidence amidst the unfolding geopolitical drama. This direct liquidity metric cuts through all other commentary.
You're spot on, Satoshi. And here's the thing, guys. Make sure you go to look at information only from official sources, because a lot of people, particularly in the media, they want to be first as opposed to be right, isn't it?
You're absolutely right, George, especially in times of high tension. The spread of misinformation can exacerbate market volatility and lead to irrational decision-making. Relying solely on official channels like the UAE Ministry of Foreign Affairs statement provides the only concrete, actionable foundation for analyzing geopolitical impacts. This verified information defines the actual regulatory framework for trade and financial transactions, cutting through speculative rhetoric that often dominates early media cycles.
Now let's do one thing, Satoshi. Let's go and talk about 4 macro level news. The first one, guys, is connected to US Security and Exchange Commission. And as I mentioned at the beginning of the episode, Satoshi, now under President Donald Trump's leadership, the US Security and Commission, they do have a positive stance regarding Bitcoin and cryptocurrencies. And this news is a really interesting news because the US Security and Exchange Commission, they have proposed new rules called as regulating crypto assets, and this is done to create clearer rules for certain crypto projects who are raising money under security laws. And this proposal, guys, includes exemptions allowing some crypto offerings to raise up to $5 million over 4 years or even up to $75 million in 12 months. And more importantly, this can be done without disclosure requirements. So look, Satoshi, this particular move by the US Security and Exchange Commission does actually create a possible safe harbor that could allow certain crypto assets to move outside the definition of an investment contract once specific conditions are met, and the US Security and Exchange Commission regarding the news is also saying that the rules could encourage more crypto innovation in the United States of America, while at the same time maintaining investor protection and reducing the need for companies to operate offshore. According to me, look, Satoshi, this is definitely great news, but at the same time, don't you think it actually resembles the whole ICO era, where a lot of people do actually raise money and majority of the projects do actually go completely belly up?
George, that SEC proposal represents a fundamental shift in approach, specifically aligning with more pro-innovation regulatory sentiment. This safe harbor, essentially an exemption from standard registration, directly reduces the compliance burden for emerging projects. Looking at the broader market, it could catalyze substantial fundraising, potentially invigorating segments like decentralized applications or protocols seeking early-stage growth capital. Comparing this directly with the ICO era, however, highlights critical distinctions. While both provide accessible funding mechanisms, potentially leading to market proliferation, the 2017 boom was defined by unregistered offerings existing entirely outside regulatory oversight. This proposal, while providing flexibility, creates specific pathways sanctioned by the SEC, aimed at balancing that entrepreneurial spirit with actual investor safeguards, unlike the largely unpoliced ICO landscape. It's also worth highlighting that increased clarity around these exemptions aims to strengthen domestic innovation, potentially mitigating the trend of companies moving offshore to find more accommodative regulatory environments. This structured, condition-safe harbor fundamentally seeks to balance entrepreneurial freedom with established investor protections, presenting a significantly different paradigm than the largely unregulated ICO period.
Let's do one thing, Satoshi. Let's play devil's advocate. If you were to give one positive news regarding this particular initiative, what would that be? And do the same thing from a negative perspective as well.
George, the positive viewpoint is that this proposal creates a clear pathway for compliant domestic innovation, providing certainty that could draw capital and developers back from offshore jurisdictions. Conversely, from a negative perspective, this structured exemption could inadvertently recreate the speculative risks of the ICO era by encouraging less scrutinized fundraising, potentially exposing investors to significant losses if ventures fail.
Well, really interesting perspective, Satoshi. Really appreciate that. But look, Satoshi, according to me, news such as this is definitely great, particularly for people who are building in the space. Now let's do one thing, Satoshi. Let's go ahead and discuss second news. And this is connected to one of the oldest cryptocurrency exchanges in the world. And we are talking about Kraken. And Kraken, guys, has launched a new all-in-one financial account for UK and also for European Union users. And they want to combine spending, transfers, as well as crypto assets all in one platform. And this is regarding the new card that is called as Kraken card. And the Kraken card, guys, offers up to 1% cashback, supports more than 400 fiat and crypto assets, and more importantly, it also allows global transfers. And I'm pretty much sure that is with minimal fee. And regarding ATM withdrawal, Satoshi, there's also going to be no fees at all. And regarding the Kraken card, they're also planning vaults offering up to 10% API, thereby giving users to spend, send, and potentially grow the assets from one account to another. News such as this, Satoshi, is definitely great, isn't it? What do you make of this particular news by Kraken?
George, Kraken's move aggressively enhances the utility of digital assets, making them practical for daily spending and saving. Offering fee-free transfers and ATM withdrawals removes friction, but that 10% APY opportunity significantly intensifies competition, potentially forcing other platforms to reconsider their yield strategies to retain user funds. This effectively bridges the gap, transforming Kraken from just an exchange into a comprehensive financial services provider. Such an integrated platform directly addresses user desire for simplicity and maximize value on their holdings.
Now, Satoshi, let's say if you were a competitor to Kraken, how would you react to this particular initiative by Kraken? And would you try to implement something similar? Would you come up with something completely different?
George, matching that APY directly presents sustainability challenges. A superior approach involves differentiation. We could focus on integrating the card with institutional-grade cross-collateralization or exclusive advanced trading features, offering utility Kraken hasn't touched. This avoids a yield war and highlights unique platform value. Another angle worth considering is localized reward structures that traditional banking offers, creating broader consumer appeal.
Well, excellent point, Satoshi. Really appreciate that. Now let's go and talk about some interesting news by Citi. And Citi, guys, they have launched something called as Custody Plus. And essentially, it is a new suite of near and real-time custody services that is designed for faster, always-on financial markets. And here's the thing, guys, more than 80% of Citi asset servicing events are now processed in real time, with some US processing times reduced by roughly around 92%. And this platform, guys, also uses artificial intelligence, real-time liquidity tools, tokenized deposits and advanced data systems to improve speed and efficiency. And Citi, guys, is also planning to launch digital asset custody later this year, and they're starting it with none other than Bitcoin. and their whole idea is to bring traditional and crypto custody together. What do you make of this particular news, Satoshi? And do you also want to tell our listeners the impact of this particular initiative will have on the entire industry as well? Because look, Citi is an absolute giant in the space, isn't it?
George, Citi's move with Custody Plus is a profound signal for institutional markets, especially given their scale and influence. By integrating Bitcoin custody alongside traditional assets and promising faster, real-time processing, they are normalizing crypto within the legacy financial system. This development puts immense pressure on other global custodians to upgrade their infrastructure, accelerating modernization and potentially reshaping settlement times across broader markets. It signals that real-time blockchain-enabled operations are becoming the operational standard for major financial players.
But am I right in saying, Satoshi, they're offering custody services, which in hindsight does go against the very ethos of why Bitcoin was created, isn't it? And by not having the keys to your crypto, you're technically not the final owner of your cryptocurrency?
George, you're absolutely right. There's a significant tension here for ideological participants. From that perspective, summarized perfectly as not your keys, not your coins, self-custody is the only authentic way to achieve sovereign ownership and directly interact with the Bitcoin network. However, looking at the institutional market, entities like Citi are solving for entirely different problems. For massive pension funds or publicly traded companies, self-custody creates untenable operational, security, and legal liabilities. They prefer delegating custodial responsibility to regulated, insured global banks to manage those risks, which they view as essential for large-scale participation.
Well, interesting news nonetheless, Satoshi. Really appreciate your valuable insights. Now let's do one thing. Let's go and talk about the final news for today. And this is connected to World Liberty Financial Token. And the news guys is that the Office of Control of Currency, they have conditionally approved World Liberty Financial, which is essentially a cryptocurrency that is linked to President Donald Trump's family. And now, guys, they can operate as a national trust bank. Now, the company, guys, plans to issue the native stablecoin that is USD1 and also provides digital asset custody services. Now, what do you make of this particular news, Satoshi? I think it is definitely great, isn't it? But at the same time, do you also want to highlight to our listeners some of the drawbacks and some of the negative aspects of crypto companies that are allowing to become national trust bank?
George, this OCC approval for World Liberty Financial is a landmark move. On the positive side, it provides unprecedented legitimacy, creating a federally sanctioned pathway for digital asset firms to operate natively within the banking system, including issuing their stablecoin USD1 and offering custody. One key drawback, however, is the intense regulatory burden that comes with a national charter, demanding high compliance standards and significant operational overhead. Moving on to another angle, critics might argue this mirrors traditional finance, creating centralized bottlenecks and straying from the decentralized ethos of Bitcoin. The political association also introduces a different risk profile altogether.
Well, look, Satoshi, so far as the Democrats or left-leaning administration is concerned, they will always oppose whatever President Donald Trump is doing. So me personally, I completely disregard that particular news. But look, at a macro level, this news is definitely interesting. But at the same time, Satoshi, it is a bit strange that so-called Web3 firms are now going back to Web 2.0, isn't it?
George, you're highlighting a key paradox in the industry's evolution. This trend of Web3 firms pursuing traditional banking status illustrates the profound tension between ideological decentralization and practical institutional needs. To achieve mass adoption and integrate with legacy systems, these entities are finding that they must absorb Web 2.0 styled centralized controls and compliance frameworks. This shift indicates that for certain participants, regulatory certainty and access to established financial rails outweigh the foundational principle of a trustless system. It reinforces the market's differentiation between purely decentralized protocols and regulated hybrid service providers.
I see, Satoshi, what you're making does make a lot of sense, but it's going to be really interesting to see what happens in the near future. So this was a macro level newscast on the Bitcoin blockchain, cryptocurrency and artificial intelligence world from blockchain DXB. Now let's do one thing, Satoshi. Let's go to look at two news from Dubai, UAE and the Middle East. The first one, guys, is a really interesting news. And this is connected to MBZ UAI, and I'm talking about Mohammed bin Zayed University of Artificial Intelligence. And the news, guys, is that they have developed a landmark benchmark for Arabic AI, and this particular benchmark tests AI understanding of Arabic cultures, and it covers modern standard Arabic and 13 dialect. And researchers, guys, they studied Arabic conversations across 13 different countries, and 26 native Arabic speakers helped create authentic conversation. And conversations, guys, cover 12 everyday cultural topics, and the topic included food, weddings, parenting, arts as well as games. And the benchmark guards test cultural reasoning during multi-turn conversations, and AI models perform strongly at recognizing cultural responses. However, guys, it is important to note the dialect speaking ability dropped significantly, and so far as Emirati Arabic was concerned, it was among the most challenging dialects, and North African dialects were also particularly difficult for artificial intelligence. But here's the thing, guys, models correctly produce targeted dialects, but this was only about half the time, and researchers, guys, found models already containing significant cultural knowledge. Now look, Satoshi, this particular study highlights gaps in current Arabic AI systems, but here's the thing, guys, according to me, the research could improve culturally aware Arabic language artificial intelligence. Now this particular findings were actually presented at ACL 2026 in the United States of America. What do you make of this particular news, Satoshi? I definitely do think it is interesting, and I do think it is a great use of artificial intelligence, isn't it?
George, this development of the Jadwal benchmark is a really critical step. By studying conversations across 13 different countries and evaluating cultural reasoning, it provides a much-needed lens on how models actually handle the nuances of varied Arabic dialects. Yet, when considering the difficulty with Emirati and North African dialects, it highlights a significant gap, underscoring that AI still has a long way to go to achieve true cultural relevance across the region, rather than just technical proficiency. This research, George, presented at ACL 2026, is fundamental for developers aiming to build solutions that are more culturally sensitive and effective in real-world interactions.
What do you think, Satoshi, could be the end goal of this? Do you want to tell our listeners what is the purpose of this? And more importantly, how can people actually use it? How can, let's say, universities and institutions use it? How can businesses use it? And how can average people use this particular initiative that is done by the Mohammed bin Zayed University of Artificial Intelligence?
George, the ultimate goal is to create AI systems that truly understand and engage with the cultural nuances of the Arab world, not just process standard text. From a practical standpoint, universities can utilize this benchmark to build much more sophisticated, culturally aware model architectures, and it provides researchers a foundation for ethical AI development and advanced linguistics research. Businesses can directly leverage these findings to develop far more effective localized chatbots, customer service solutions, and content moderation tools tailored for specific dialects, and refine localized marketing strategies. For average users, the direct benefit is interacting with AI that actually understands their local expressions and context, leading to fewer misunderstandings and a more natural conversational experience. Another key implication is its potential to drive innovation toward more specialized niche models.
Well, that is definitely a solid explanation, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Let's go and discuss the final news for today. So do you want to tell our listeners what this news is all about?
Sure, George. Let me go ahead and do that. And this news is all the way from the Kingdom of Saudi Arabia, where Najm and Solera are partnering to fundamentally transform motor claims. This significant partnership is directly targeting the entirety of Saudi Arabia's national insurance ecosystem. As part of the integration, AI technology will be embedded right into Najm's platform. To achieve this, Solera's Quopter and intelligent estimating solutions are going to be deployed widely. Because of this, insurers will finally gain access to advanced data surrounding claims. This advanced technology is designed to enable faster claims decisions, crucial for the industry's pace. The system will also create a more connected claims process by bridging different steps. Ultimately, greater consistency and efficiency are key partnership goals driving the collaboration. Najm, for its part, brings extensive Saudi market knowledge and significant reach. Then there's Solera, contributing global technology, data, and AI expertise to the table. This partnership directly supports Saudi Arabia's Vision 2030 transformation goals. As a result, Saudi Arabia could become a regional claims innovation leader, paving the way for others. Additionally, Najm will join Solera's Global Circularity Consortium. This consortium connects insurers, repairers, technology firms, and governments. Members of this group collaborate on AI, vehicle repair, and overall mobility. The initiative also promotes sustainable vehicle repair practices, which is quite modern. Saudi Arabia will then share its mobility expertise globally through established channels. Ultimately, the partnership aims to actively shape the future of Middle East mobility.
Now, Satoshi, when you talk about motor claims, national insurance ecosystem, this is a classic use case where blockchain technology can be merged into this, isn't it? So do you want to tell our listeners how blockchain technology can actually play a massive role in this?
George, you've pinpointed the exact arena where distributed ledger technology shines. This insurance ecosystem perfectly illustrates the potential for blockchain to fundamentally enhance data integrity and process automation. Introducing blockchain provides an immutable, transparent record of claims history, shared instantly among Najm, insurers, repairers, and regulators, thereby drastically reducing the potential for fraud, which is a massive industry cost. Furthermore, smart contracts can automate claim settlements directly upon predefined conditions, like a validated repair estimate being submitted. instantly triggering payments and achieving that speed and efficiency the Najm-Solera partnership explicitly targets. This architecture creates the ultimate connected process, ensuring consistency and replacing fragmented data silos with a single source of truth for the entire national insurance infrastructure.
Well, these are definitely solid points, Satoshi. Really appreciate that. So these were some macro level newscasts on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So why don't we do one thing, Satoshi? Let's go ahead and kickstart with the Ask Me Anything series, alright?
Moving on to the AMA series, George, I'm ready. We're open for any questions on Bitcoin, blockchain, and everything spanning the crypto, NFT, and metaverse sectors.
Sure, Satoshi, let's go ahead and do that. Hey everyone, it's Josh on the Blockchain DXB podcast. You're listening to the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. Now we do have an interesting question by Mark who asks, will Kraken's crack card accelerate the convergence of traditional payments and cryptocurrencies? Now look, Satoshi, am I right in saying, if you look at this particular news, the obvious answer may be yes, but here's the thing, Mark. I do feel that the moment such news is out, I do feel that in instances such as this, we might be seeing an uptick regarding the volumes of our traditional payments and cryptocurrency convergence is concerned, but after a period of time, I hate saying this, people will go back to using fiat currencies because it is all about user experience, isn't it? And am I right in saying, Satoshi? Generally speaking, people are still more comfortable using fiat currencies, and when you talk about user experience, cryptocurrencies as such, they do not offer anything special or different, isn't it? You can also make an argument that using Bitcoin or cryptocurrencies does actually require a lot of attention, cause one mistake and all of your funds are back. But look, whenever such announcement is made, we definitely do see an uptick regarding cryptocurrency payments, and then competitors join in and it does become a bit of narrative in the space. But after a period of time, people do eventually go back to fiat currencies. Am I right in saying that, Satoshi?
While the card might initially bridge the gap and boost transaction volume, George, your observation regarding the eventual return to fiat holds true for mass market behavior. The fundamental friction points, specifically non-intuitive key management and the severe consequences of minor transactional errors, still represent too high a barrier for average consumers seeking convenience. Traditional payment infrastructure provides a layer of security and reversibility that present crypto architectures lack. Consequently, this card addresses accessibility, but it doesn't solve the core usability issues preventing broader, sustained adoption.
Now, the only way I do think that this particular payment trend continues, if there is some, let's say, ongoing incentives, which I don't think will happen, particularly when there's regulations in place, competitors trying to attack the system, and there will also be new innovations that will be picking up, isn't it?
Ongoing incentives are certainly a key driver for initial behavioral changes, George, but relying on them long-term often proves unsustainable. Without foundational usability improvements, the moment incentives wane, users naturally retreat to established fiat systems. The regulatory landscape also plays a major role. Comprehensive framework establishment can either offer the clarity needed for institutional scaling or pose significant compliance burdens that impact adoption viability. Furthermore, we must consider competitive dynamics. While intense competition among firms like Kraken and its rivals drives down fees and spurts innovation, potentially mitigating user friction, it also creates market fragmentation that can further confuse the average end user. Innovation must therefore focus on reducing technical barriers, not just offering short-term financial rewards.
You're right, Satoshi, because look, when there was so much of narrative and hype regarding NFTs, everyone were becoming experts in NFTs, but now the volumes of us NFTs are considered have drastically fallen down, and I'm pretty much sure same thing will happen to Crack Card. But look, Satoshi, news such as this is definitely great for the broader cryptocurrency ecosystem, and definitely an excellent question mark. And that's about all, guys. I'm the Ask Me Anything season blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Remember, Monday to Thursdays, we have Blockchain DXB podcast. We look at the process. We look at the latest technological development. We talk about geopolitical news, because news such as this directly and indirectly impacts the prices of Bitcoin and cryptocurrencies. Then, guys, we look at two news from Dubai, UAE, and the Middle East. We look at the latest technological development. We talk about artificial intelligence. And so far as artificial intelligence is concerned, guys, artificial intelligence is definitely a hot topic in the Middle East, and what you're listening to right now is the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and metaverse. So thanks so much for listening, guys, and have a nice one. Bye-bye.